What if I say you can thrive in real estate as an investor in a high interest environment? It's hard to believe, but the reality is that when everyone is scared, you can make a profit out of it. The reason for fear is simple. When the interest rate is high, investors choose not to finance rental property. Perhaps they think that it's prudent not to try. However, they miss out on an important point. When interest rates are high, demand for rental property increases. This is because home buyers postpone buying new property and continue renting. At the same time, not enough properties are available because many investors also stop buying property. That's when you can profit and thrive when everyone is in fear. But how exactly should you do that? What prudent steps should you take to ensure you buy a property at an affordable rate and rent it out to have an attractive rent? Hi, I'm Manyara Kirago, and I've been a personal finance professional for the past 2 decades. In this video, I will explain how you can thrive in real estate in a high interest environment, something no one tells you about. By the end of the video, you will have a practical plan to follow. If you need help to ensure you get the best outcome with your finances, I'm available for your support. Please check out my do-it-yourself online course, my one-on-one financial freedom coaching, and the Eternity Real Estate program from the links in the description below. If you like this kind of content, please subscribe and share it with anybody you think may benefit from it. Also, ring the bell icon to be notified each time I post a new video. So let's get started. The first step is to get financing, but in a different way. During a high interest rate environment, financing becomes highly expensive. That's why most real estate investors let the high interest era pass. But for you, that's precisely the moment to make a move. But before discussing the financing options, you need to know that reducing leverage is the key. This can be accomplished by increasing the equity contribution through a larger down payment when acquiring a property. This will help you reduce borrowing costs and potentially facilitate the negotiation of a lower interest rate with lenders. Your goal should be to cover as much portion of the cost as possible from your side, using your savings and the cash that you hold. Then you should go for conservative borrowing by limiting the amount borrowed relative to the property's value. In this way, you would benefit from getting a low interest rate on easier terms because it's lower risk, despite living in a high interest environment. And that's when we have to talk about financing options. Private lending becomes the first option to use. It presents a valuable strategy for property investors, especially when traditional lending routes aren't the best fit. Private lending involves borrowing funds directly from individuals rather than relying on financial institutions like banks or mortgage companies. One significant benefit of private lending is the ability to negotiate favorable terms, potentially resulting in lower interest and more flexible repayment schedules. This flexibility can greatly assist you in securing financing that better aligns with your investment goals and financial circumstances. Moreover, private lending creates a win-win scenario for both parties involved. For you seeking capital, it offers access to funds that may not be readily available through conventional channels. At the same time, individuals with surplus funds can earn returns on the investments through interest payments. Here, you should pay attention to an important fact. There are always people you know who have capital but need to be pushed to enter into the lending business. You can be that push and their first client, but you have to earn their trust first. Encouraging individuals with available funds to participate in private lending can be achieved through effective networking and communication strategies. You can leverage your existing connections and networks to identify potential private lenders interested in collaborating on investment opportunities. But that's not the only option you have for financing. You can benefit from seller financing in some cases. Seller financing, also known as owner financing or seller carryback, offers an alternative approach to buying properties compared with the traditional route. The seller acts as the lender instead of relying on a bank or mortgage company. This arrangement allows the buyer and the seller to work directly together to hash out the property sale details, covering aspects like the sale price, down payment, interest rate, repayment schedule, and other important factors. No matter how strict the terms are, they are always more flexible than what the bank offers. It's quite easy too. Rather than going through the hoops of securing a standard mortgage, the buyer commits to making regular payments directly to the seller over an agreed period until the full purchase price is paid off. Essentially, the seller extends credit to the buyer, making property acquisition possible without involving third-party financing. The next step will be to manage the property carefully. Supposing you bought property at affordable interest rate and terms that suit you, but that's not the end of the process. Because you have agreed to pay a higher interest rate than average, you have to reciprocate by making a profit through steady and attractive rent. Before you rent out the property, you must understand that the high interest environment has increased demand for rental property. Therefore, you would have plenty of tenants to choose from, and the key is to choose the best ones. Establish a thorough tenant screening process that includes credit checks, employment verifications, and rental history reviews to select tenants with a stable financial background. In this way, you can reduce the risk of payment defaults. You can also implement strict income requirements to ensure tenants can afford rent comfortably. Even as interest rates rise, include an extra layer of financial security. However, by adding extra layers, you don't want to create hurdles for potential clients. Therefore, to avoid setting unaffordable rent, conduct extensive research in the local rental market to determine competitive rental rates, attracting and retaining tenants who may choose to rent in an environment with a high interest rate. Moreover, you can provide incentives for current clients to renew their leases, such as suspended rent increases for lease extensions, to maintain stable occupancies and minimize turnover costs. Doing so will lead you to a steady rental income, but often it can be dented by maintenance costs and expenses, which you need to control. Because it's a high interest environment and your loan is expensive, you have to apply strict saving strategies. You are the rental property owner and you know how to save costs. For example, you can implement preventive maintenance plans that involve scheduling regular servicing of essential components such as plumbing and electrical systems. This proactive approach aims to prevent breakdowns and minimize the need for emergency repairs that can make a huge dent in your income. You can also coordinate with your tenants and educate them on proper care and maintenance practices. Providing guidance and instructions on fundamental tasks encourages responsible behavior and helps prevent unnecessary damage to the property. Moreover, you can consider energy-saving upgrades, such as installing energy-efficient appliances and LED lighting, which can lead to long-term savings on maintenance and utility bills. Taking advantage of bulk purchases for maintenance supplies and negotiating with suppliers for discounts can also help reduce costs, especially for property owners with multiple properties or those collaborating with others in the area. By making such efforts, you can cover the expensive financing option and still have extra money, which you would not do under normal conditions. But is buying and renting property in a high interest environment worth it? Well, the simple answer is yes. However, I have to explain how this works. In a high interest environment, The cost of borrowing for homeowners increases, prompting many potential buyers to postpone or reconsider property purchases. That's the basic human psychology, to wait for waves to settle down. But people need homes to live in. Therefore, there is a surge in demand for rental property, as there are now more tenants in the market than in normal conditions. You will get higher rents due to the future home buyers choosing to live in a rented property. This heightened demand creates an advantageous market for property investors who own rental properties or seeking to invest in them. But that's not all. Unlike normal conditions where more investors buy and rent out rental units, their number diminishes in a high interest environment. Ultimately, there is an extremely high demand for rental units, but a sharp decline in supply. This combination of increased demand and diminished supply can create a market imbalance, leading to rental price hikes and enhanced property investors' potential for rental income. You can capitalize on the situation by acquiring rental property during periods of high interest and heightened rental demand. You can secure rental units that yield steady rental income. Furthermore, with rental prices rising due to heightened demand, you can stand to potentially achieve higher rental yields and enhance your overall return on investment. This scenario aligns with the investment strategy. Do not wait to buy. Buy and wait. The essence of this concept lies in not waiting for perfect conditions to invest, as doing so may lead to missed opportunities for financial growth. Remember that the fate of real estate investors changes completely during times when everyone is in fear and choosing to miss out. What do you think? Should you benefit in high interest environment by filling the supply gap of rental property? Or will you be waiting so that interest rates can come down and you profit like everyone else? In the comment section below, share your thoughts on what more can be done to thrive in a high interest real estate environment. If you want to learn in more detail how you too can generate passive income through real estate investing so that you can finally gain financial freedom, then what you need to do is watch my free training. Click the link in the description below to get immediate access. If you loved this video, give it a like and subscribe to the channel for practical insights on financial freedom, personal finance, and financial literacy. Thank you for watching.